Ladies and gentlemen of the crypto space, we're live on a Wednesday at 11:29 a.m., December 30th. Whoa, it's the new year, boys and girls. How about that? Today's topic: froth, exuberance, risk, M2, endless liquidity. What does that all mean? What is risk? Where are the markets? You got new folks getting into the markets every day through this Robinhood, this TikTok stuff, and they're like, this is the opportunity of a lifetime. Do they know what froth is? Do they know what risk is? Do they know they may be buying a top? Is there a top actually? So we get into all these questions, and what we're really dealing with is emotions. What we're dealing with is really risk, and that's what I quite enjoy talking about because we want to minimize our risk and maximize our gains, and that's what we do. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see what's going on. Who's in the stream? We got Brady's in the house. Always a pleasure. Thank you for joining. Charlie in the house. My man. Crypto Chick. Always a pleasure. Brady says, good learning as much as I can, as fast as I can, so I can increase my streams of income over the internet. Streams of income, boys and girls. So obviously, that's a great way to start. You know, I love the notion of assets and the notion of asymmetric returns, where an asset could appreciate substantially more than it has historically depreciated, or just appreciate, not exponentially, but significantly asymmetrically. So that is one of the two main considerations in uh, attaining a position. Either it's going to appreciate or it's going to produce some sort of yield. Now, the interesting thing of the crypto space of late, of 2020, is that you can have assets that both appreciate as well as produce yield. And that's so meaningful because yield is dead in the legacy financial system. Treasuries and bonds produce junk. They produce nothing. And people are literally investing in treasuries for the appreciation of the bond itself. They're not placing value, they're not allocating value in assets like that to produce yield. So what does that mean? That means there's no way to produce yield meaningfully, risk considered, in the legacy financial system. So what they're doing is speculating, and that is what's driving up asset prices. People are in a quest for yield, and they're particularly, pension funds. They're not able to achieve the yield that they need to fulfill their pension obligations. So what they're doing is applying more and more value to the equities markets because they are basically vertical and achieving the desired yield. Now, what does that mean? That's extraordinarily risky. It's risky because there may be a top in the market. There may be a systemic instability. Now, that's probably the only thing that I think will take down this market. Now, like in 2000, I'm no historian, I'm no macroeconomic historic expert, but it was retail participation. You had the same irrational exuberance. Clearly, a very different time period with regard to the subtleties of the macroeconomic landscape. But nonetheless, it was just way deviated from any of the moving averages. And I define myself as a mean regressionist. The mean regret the average is like gravity. Things trend towards the average, and if you're deviated substantially from any of the averages, let's take a look real quick. Here, for instance, let's go over to the SPY. Not up there, SPY. Things will want to go towards the average, but we have not seen that. We haven't seen mean regressions. Let's get the chart to redraw. Nope, I have to adjust the time frames. So we're substantially deviated, but here's the thing. We've been deviated. Well, that's the daily. So look, we've had mean regressions, and this was the event back in March. Um, so there's the risk. The risk is that the gravity kicks in. We have a mean regression, but there's also another risk, which is kind of the thought that I had in my mind prior to starting the stream. And it has to do with basically M2 money stock and just what has become the unofficial mandate of the Fed and the Treasury, which is to backstop the entire market, provide infinite liquidity, and we're seeing that in the M2 money stock that has been created. It's to the tune of trillions of dollars. Absolutely incredible. Countless trillions of dollars. 15, uh, I don't even know at this point. 5, 6, 7 thousand billion dollars. So it's trillions have been created by the Treasury creating bank reserves and the Fed leveraging it and doing all those shenanigans that George Gammon talks about oh so very well. And what does that mean? That means that the risk that I thought of this morning was what if it keeps going up? And there's no reason to say that it can't keep going up. Things keep going until they stop and capitulate. You don't know when they're going to reverse. No one knows. No one could pick a top. Some folks understand the data better than others. Stephen Van Meter really goes through the data very well. If anyone is going to be a sportscaster during some sort of liquidity event or a capitulation event where the trend stops, the buck stops, and there's a significant change in the landscape, it's going to be him. But no one knows exactly when. So there's no reason to say it will stop. Historically, it has, but there's no guarantees it will. If you're talking about the Caracas Stock Exchange, where clearly they have just printed their way to oblivion, it's gone up for a long, long time. Let's go out to the 5 years. So you're talking about 2019, they had whatever event, I don't know the history, but it has just gone basically straight up and vertical. And why can't the U.S. go up for years at a time? It's a global reserve currency, the global reserve currency, and the mandate for the Fed and the Treasury has completely changed. They're backstopping the entire system. They're buying every bond from every corporation in sight. What they've done has never been done before, so the market can do what it has never done before. These are the thoughts on my mind. And that is a brief explanation of the thought that I had before I started the stream. Who else is in the stream? What's going on? Rick G's in the house. Mustafa, what's up? You're the XSN man. StakeNet. StakeNet is a wonderful asset. I've held it for years. And you all know the story with their decentralized exchange platform. Comparable in some regards, at least in technology and a lot of functionality to BlockNet's decentralized exchange, but there's very unique characteristics such as Lightning Network for Bitcoin and Raiden for Ethereum as an L2 solution. So it has the potential, as I described the same with BlockNet, as to be a critical piece of crypto infrastructure. Bam! I said it. David's in the house, always a pleasure. Brady says, Noah, there's no value like therapy for your passions. So that's why I do what I do. I am not the smartest person in the room. I follow the smartest people in the room. I understand the vast majority of what they talk about. I do not understand the entirety of what they talk about. I do not have nearly the same experience at all that they have, but what I have is an interest. What I have is a capacity to talk to myself to better understand the ideas and the concepts. I express myself on Twitter, and I talk to you guys on the stream about what I learn. That helps me better understand it and digest it and apply these stories, these principles, to my own portfolio management. That's the name of the game. Any thoughts on where to best stake Ren? There is no Ren staking. So Ren has the potential to substantially appreciate long term because of the dark node narrative. The entire dark node concept is designed to match to encourage the price of Ren to be 3x the total value locked in the platform. The total amount of value that the dark nodes, the decentralized or to be decentralized network of dark nodes, have in custody. And they do that by inevitably programmatic modification of the mint and burn fees. So there is no way to stake Ren, unfortunately. So Ren requires a dark node, which is 100,000 Ren bond, which gives you the capacity to spin up a literally a dark node server, which is deployed on AWS or DigitalOcean, and it's all managed by command line. Let's see if I can show you guys that real quick. Clear. Go over here. List. So yeah, so there's the dark nodes. Pretty cool. Pretty cool. And it's basically a command line utility that Ren obviously provides, and it facilitates the entire instantiation and management of deployed dark nodes. Pretty cool, huh? So that's the Ren story. I'm more than happy to go over Ren. Let's take a look at the price. I won't go too much into the story of it. We've gone over it historically, but I could go over it in the future if folks want. Ren Bitcoin. So after yesterday's rip, we've had a significant dip. Let's go over to the 30 min. Oh, nope. Go up. All right, so it's bearish. Right now, this is quite bearish. We have lower highs, and it's a little premature to say lower lows because if you take from this trend, this could technically be a larger, higher low, but we haven't seen a higher high, which we were hoping for when it briefly broke above the long-term falling wedge trend resistance. But right now we're hovering around the 30-min 200 EMA. It looks a little weak. It's not necessarily bearish because it's not depreciating below the 30-min 200 EMA substantially, but it's not also holding above it. It feels like it's weak to push above it, and it's being held below it, the price action. Um, but Ren is not really something. We've talked about this to hold to appreciate. It can appreciate, but the beauty of Ren really is that dark node, and I know it's a very large number to get a position in a dark node, so I understand folks' interest and choice to still participate in the Ren narrative by holding a position in the asset. So I can't overwhelmingly say that's not a good choice. There is a great deal of logic to say it's going to appreciate in the future for the reasons we've discussed. But as of right now, the asset is bearish. Um, hey, you know what? I just thought of it. What was I thinking? Yeah, you can stake Ren. Go over to Bancor. Bancor stakes Ren. So you go over to Bancor and you have the Ren pool. Which, by the way, is providing 16.73% yield denominated in Ren, 192% yield denominated in BNT. Bam! Bancor, baby, I think this is underappreciated. They only have $130 million in liquidity. There's other DeFi protocols out there that are drawing like upwards of $1 billion of liquidity in a very short period of time. People FOMO into these assets. It's absolutely incredible the amount of value that is allocated towards these, not overwhelmingly risky, but definitely risk included DeFi protocols. So Bancor has one heck of a history, and that is a major consideration in evaluating the risk of the platform. When you're talking about relatively new platforms, unknown developers, there's definitely an increased risk profile. But there's risk even in the platforms of the veteran protocols. But as a protocol matures, as it has been available for an amount of time, the risk obviously decreases and folks start to become comfortable with the platform. Now, bear in mind, comfortability may not necessarily be a good thing, so we should still always use proper judgment. Never go all in, never spread too thin, never apply your entire position to something that is risky. And risky is basically anything other than completely risk off, which is Bitcoin. Completely risk off in the crypto space. Um, and that's what we talk about. And that's how we evaluate the risk, and that's how we evaluate positions that we're considering taking um, is going to be risk, and you need to consider it. That's the whole point. I like to hammer home, boys and girls, don't neglect the risk. Never invest what you can't afford to lose, and you got to spread the risk around. Don't over allocate to a particular position. Don't get greedy. Never, ever, ever go all in. All in is a bad thing. Charlie G, hit them likes, boys and girls. Thank you very much. Main Street Financial News is feeding us the Bitcoin news very quickly. Yeah, the Bitcoin narrative is overwhelmingly in play. Um, you have some of the largest financial institutions in the world. I don't need to ramble off the names. Everyone's heard them at this point that are getting positions. Now, clearly, people getting positions, nudes breeds more positions, and that is a self-fulfilling prophecy. Attention and activity create or encourage more attention and more activity. That's just the nature of human beings, and that's how we get into the psychology of value allocation and investing. So, that encourages us to think that we're going to see continued appreciation. Now, bear in mind, while this chart looks absolutely primed for a bullish explosion to the upside from 28,400, I'm inclined to think this will break to the upside based on technicals. But the problem is, and what a lot of mean regressionists, which I consider myself to be, we're quite deviated from the long-term averages. So, as I said, the average is it has a gravitational force. Things like to return to the average. It's just the nature of human beings. So we're quite deviated. So if you see a mean regression on the 4 hour, talk about $21,900. And that's substantially to the downside. So we're quite inflated as compared to that average valuation. Um, so you can have a significant mean regression, and it can take a period of time with lower highs and lower lows, and it would be very bullish if you bounce off one of these averages. This was basically the story of the S&P, albeit that it's horribly manipulated by the monetary policy of the sovereign government. Um, let's look real quick. Let's look over on the daily. Let's adjust the pricing. So you have your mean regressions, and this was obviously a systemic event. But the fact that we actually don't have too many mean regressions over the years, let's go out to the monthly. Oop, oop, oop. Let's drop it down. Nope. Let's constrict the price. So look on the monthly. We've actually haven't had a mean regression since the 2008 financial crisis, and we don't have historical data, at least as per TradingView, back before then. And that's just I don't know what to make of it. You know, there's so much logic behind the notion of a mean regression, and there's so many people that subscribe to the rational concept. But look in the equities market. We literally haven't seen it in 11 years, 12 years, or however how long this is. It's about 12 years. So what does that mean? That means that markets can be irrational, where they don't make sense. Um, there's so many look that's an irrational this is an irrational thing because so many folks subscribe to mean regression, yet we literally haven't had a mean regression in the S&P for 12 years. So does that destroy the narrative of being a mean regressionist? I don't know. That's probably another point that I could hammer home. A lot of investing, or a good portion of investing, is sentiment and feeling and instinct, and it's not necessarily based on rigorous data and metrics and certainty. It's a lot of instinct. That's probably one of the better words I could choose to describe it. So, because this is deviant from a concept that so many folks subscribe to. I mean, we have the mean regressions of the shorter time frames, but we don't on the longer time frames. And if you're looking at data over a period of time, all time frames are meaningful. And then the question becomes, are some time frames more meaningful? I don't know the answers to these questions, but these are the questions that are important to ask ourselves to attempt to better understand the markets, which gives us, hopefully, and that's the whole thing, the better we can understand the markets, hopefully we get an edge in making decisions how we allocate value against different markets. Look at this. So we definitely had the mean regressions here, significant one in '08. And then here's obviously 2000. But you go out to the monthly and you never had them. So what does that mean? Can basically we just go up, up, and up? Of course. Um, so that's really like that's a different narrative, and that's probably what I subscribe to as well, which is the accumulation concept, which is we're going to accumulate hard money assets, assets that don't increase in supply in the face of an ever increasing M2 monetary supply. Look at this. M1 money stock is another story. That's base money, and basically M2 is leverage based money. M2 is basically the value that's getting circulated amongst the banking system. So interestingly enough, let's go over to M2 velocity. I want to see that M2 velocity. And M2 velocity versus M2 money stock is probably one of the strongest stories in a long time to argue that there's systemic instability. How could you have M2 money? Let's see if we could do edit headline M2 stock, add data series. All right, I'm not good at the graphing. Basically, M2 money stack goes straight up and M2 velocity goes straight down. So, and this is what Stephen Van Meter goes over very well if you're so inclined to listen to his stories. Um, and this is why so many people think there may be a top, but basically, if M2 is going up, there doesn't necessarily need to be a top. So, anyway, let me go back to who's in the stream. If anyone has any questions, let me start to make some sense. That's right, Crypto Trick. That's why we have each other to talk about these ideas. And they're definitely complicated ideas that are beyond the grasp of most. They're beyond the grasp of me, but I attempt to digest them as best as possible. Zapperfi, well, technically Zapperfi is not pools, Crypto Chick. Zapperfi interacts with a variety of DeFi platforms in a consolidated fashion. It's a wonderful user interface. Let me go over here and not show everyone the amount of capital I made this year. But Zapify is really cool, to say the least. Heirlooms in the house. Always a pleasure, my friend. Thank you for joining. All right, let's go back and let's look at a couple of other assets. Look at CRV, BTC, because I want to keep up on that. I believe that was in a symmetrical triangle formation on a relatively low time frame. Oh, messing up the chart. I broke the chart, guys. Oh. All right, let's not look at CRV. Where's the chart? I got the price action wrong. Let's see if we can reset it. All right, well, that's loading. Let's look at what's going on in the overall market to see if there's any irrational exuberance. That's always something good to look at. Sort by 24-hour to see price appreciation. Interesting. Look at that rip. 22% for XRP from the bottom. That's a complicated story to tell. The government being involved, the retail participation. It's good to see. A lot of people lost a lot of money, so it's good to see a good bounce off the bottom. Man, Uniswap really needs to instantiate profit sharing. I don't know why they haven't done that yet. Obviously, 1inch and Curve provide that significantly. Polkadot with the 44.7 rip over the last 7 days. Polkadot narrative is strong. I think the Cosmos narrative is stronger, considering the BSN and IrisNet and IRETA and what they're doing with interoperability and basically the entire Chinese national blockchain narrative. So that's what I think about that. Damn, Celsius just goes up. It literally just goes up. $5.44. That's crazy. Anyway, Aave looks good. Damn. 10% rip to the upside. Look at these 24-hour gains. It's not a rational exuberance, but these are some significant. Uh, this is significant appreciation, boys and girls. It's nice to see these assets moving. Sushi 9.6. Kusama 15%. That's good to see. That's the bit of a test net for Polkadot. Well, it is a test net for Polkadot. Anything else that's interesting? No, not much. Reserve rates 3.9. They deserve it. Good for them. VeChain, Loop Ring. Loop Ring's a good deal. All right, let's take a look. Let's see if I hit the topic. Let's see if I hit the topic as well as I wanted to. Froth, exuberance, risk, and endless liquidity. So, in the face of I would argue, irrational behavior by the federal government, the markets are behaving irrationally. They're just going straight up. That's not the way it's supposed to be. You're supposed to have uh, a normal market is where buyers equal sellers, or at least there's somewhat of a balance. So you have an up and down process, and then you have an instability towards one direction or the other based on external forces such as fundamentals. But basically, we don't see that anymore. Fundamentals are completely gone from the legacy financial system. And fundamentals doesn't overwhelmingly apply in the crypto space because the irrational exuberance just overrides it. And there's greater periods of irrational exuberance in the crypto space than in the legacy financial markets. But as I always say, probably one of the most important things to think of is fundamentals tell us what to look at, and technicals tell us when to look. So you can still apply, a strong fundamental analysis to the crypto assets, but especially the smaller ones, they tend to behave irrationally, significantly departing from the fundamentals. Like, why is it going up? Because there's someone posted on Twitter or social media and is hyping it up. So you're not really going to catch that. But overall, still the logic remains that over time, a strong pick based on fundamentals is going to appreciate because of demand, consumption, so on and so forth. So as I said, fundamentals tell us what to look at and technicals tell us when. Let's go over to Ren real quick, considering that one of the strongest fundamentals in the entire crypto space. So we all know that the fundamentals are extremely strong, and the technicals tell us that my charts are all messed up and they're really annoying. Expand. Oh, that's why Kurt wasn't showing. So the technicals are quite bearish. So the technicals say it's not time to take a position. And that's just real. That's just real. Let's go over to one where there's diehard people that absolutely love their asset. Um, yeah, fundamentals have been strong for years for Digibyte, but doesn't have the traction it really needs, and the market is driven by speculative price action. And this is a bearish chart, unfortunately, guys. So some say when the price goes down, you buy the dip and dollar cost averaging, but you never know when it's going to keep going down. So you really want to wait for a capitulation event, as I always say. You wait for a breach of some sort of resistance, a retest, and then a higher high, and that provides you with significant confluence, suggesting more likely than less likely continued price appreciation. Take a look at this. Look at 1 inch. Oh, how do you like that? Now look at that EMA and the 30 min. Ooh, look at that resistance. So there's your opportunity, boys and girls. So 1 inch, people have been itching for a bottom, and this thing really cratered. Damn, 73 cents. So what you want to see is a break to the upside, a retest of support, and then a higher high. And that's what I would argue the optimal uh, risk adverse entry, where at that point there's a substantially greater likelihood of continued price appreciation as compared to depreciation, with significant confluence suggesting that is the case. Um, and in fact, if you see, this is there's resistance. So that the opposite, you have notable confluence suggesting not necessarily further downside price action, but look at the volume. But at least not appreciated price action. resistance needs to be broken for the price to actually go up. Oh, guys, I had you on the main screen. I'm sorry. All right, but we're gonna wrap it up anyway. Today was a bit of a not the clearest message, but hopefully it was something meaningful, and that's the whole point. Focusing on overindulging crypto for 1 to 2 years until the COVID crash in real estate is expected. That's another story. That's a big story to discuss, Heirloom. Real estate is beyond my expertise, but what's notable is that um, it's an asset class, which means any and has a fixed supply. So any asset class with a fixed supply is going to appreciate in the face of an asset, in the face of the currency having a massively increasing supply, and that has always been the case. And what happens and why the perceived inflation for the general public is relatively muted is because what I would call psychological operations by the banks, and also the design of currency to be fixed units, and that's really where the focus is put on fixed units, but not the value of the fixed units. But the inflation is really there, but and we're going to start to see it as they roll out $600 or maybe $2,000 stimulus checks, because that's going to increase the amount of dollars that are circulating throughout society. So you can imagine so many folks get their stimulus checks, and that many more people, that many more dollars are chasing the goods and services that are in society, and that's going to encourage the price to go up. Um, we know from the Chapwood Index that for the past however many years, it's been about 8 to 12% consumer price inflation. But especially with the stimulus this year, it's almost assuredly to be the case. There's going to be a pronounced increase in those numbers in the coming years. Very unfortunate, but we'll start to see it. And don't let the damn banks lie to you. That's the their fixed dollar amount that they like to tell you is not changing. Um, Man, that conversation yesterday was absolutely fascinating. Um, Fixed dollar amount versus uh, uh, um, the value of those dollars. And it's such a lie that the fixed dollar amount is what people should focus on. And that's really the story that I like to remind people of. It's not the quantity of dollars a person has that's overwhelmingly significant. It's overwhelmingly significant with regard to fulfilling contract obligations, but it's not significant with regard to uh, not portfolio management, but wealth management and like retirement goals, so on and so forth. What matters is the value. So we talked about the dollar being just a horrible vehicle for value storage, and that's why we do what we do in the stream, and we talk about opportunities of where to apply that value that has a more likely than less likely chance of appreciation. Because we sure as hell know that the dollar is going to depreciate. That's the name of the game. And the staking pools, White Wolf says, and heirloom, hasta mañana, te veo mañana, señor. Apartment available in short. The amount of people will be losing their homes. Yeah, I don't want to speculate on such a tragic event that's likely to play out over the next couple months, and we know it's going to occur. The staking pools as well are their place to learn from how to stake, borrow against your BTC to use Curve. Some of my older streams I've dived into that significantly. I'd like to talk about that more and have much more of um, a rigorously prepared story to tell you guys. I could dive into Curve, I could dive into MakerDAO again, I could dive into the risk assessment of those protocols and how to consider position sizing, so on and so forth. These are topics that I've discussed historically, but I'm more than happy to discuss again. Um, Finematics channel, White Wolf. Well, there's plenty of content out there, boys and girls. Just don't get sucked into FOMO. Don't make spontaneous, irrational decisions. Sit down and think through your course of action, and you guys need to understand the risk that you're taking. If you take a Bitcoin and throw it into MakerDAO and there's an exploit in one of the protocols, how will you feel if you lose that money? Now, there's a chance and there's odds, less likely or more likely, that nothing happens. But there's a greater than zero chance that something happens. So you need to be able to sleep at night. That's probably the most important thing that I like to say. If you can sleep at night, all right, take the bet. Is the risk worth the return? Is what you need to come to grips with. Yes, I'll do that, Crypto Chick. Let's do that tomorrow. I'll have a more focused message tomorrow. But anyway, I thank everyone for joining me. Favorite time of the day. And we'll do this again tomorrow. Wednesday, 12:04 p.m., December 30th. Smack those thumbs up buttons. Tell everyone to subscribe. And I will see you all tomorrow. Wish you all a wonderful day. Peace.